Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Bitcoin has seen a sharp retracement over the past 24 hours, dropping 3.15% from 83,800 down to 81,200. However, as I'm recording this, we're witnessing a strong relief rally, pushing back up to 83,300. This bounce aligns with a technical confluence, an oversold RSI, and a green dot momentum shift on the 1-hour wave trend indicator, both signaling a short-term reversal. But the real driver for market volatility isn't just the technicals. The key macro event on the horizon is tomorrow's U.S. unemployment report for March. Last month, the rate ticked up from 4.0 to 4.1%, slightly surpassing expectations. Now, while the consensus remains at 4.1%, Trading Economics is projecting 4.2%. If that prediction holds, it would indicate further softening in the labor market, which could send shockwaves through risk assets. Why does this matter for Bitcoin? If unemployment exceeds expectations, markets could go into risk-off mode. Historically, rising joblessness leads to lower consumer spending, putting pressure on equities like the SPX and NASDAQ. And since Bitcoin has maintained a high correlation with traditional markets, it could face an amplified reaction, potentially retesting lower liquidity zones before stabilizing. That said, the bigger picture remains bullish. While short-term fluctuations are inevitable, Bitcoin's long-term trajectory remains intact, with institutional inflows and a broader macroeconomic pivot still in play. The key now is managing volatility, waiting for key liquidity grabs, and positioning smartly for the next leg up. Join the free Discord for real-time trading thoughts, entries, and exits. Click the like button if you found this valuable. Subscribe and turn on notifications so you never miss an update. And see you in the next one.